Hello, everybody. Welcome to Money Matters TV. I hope everybody had a great summer and we're ready to dive back into fall and get serious again. My name is Steve Rosenberg. I'm a principal of the GSD Group. We do consultancy work in the not-for-profit space, mid to large-sized not-for-profits. And I'm thrilled to be your host today. I'm also the author of the book, Make Bold Things Happen, Inspirational Stories from Sports, Business, and Life. I want to introduce you to my co-host today, Vahan Janjigian. Vahan is the Chief Investment Officer at Greenwich Wealth Management, LLC, an SEC registered investment advisor with more than $2 billion under management. Vahan has an impressive resume. He holds a PhD in finance and is a CFA designation himself. He previously served on the faculties of several major universities and has delivered lectures all over the world, including in Singapore, Armenia, and the UAE. Very impressive. Vahan's publications have appeared in academic and professional journals, and he is a frequent commentator on television and radio. He is also the author of Even Buffett Isn't Perfect. We're going to hear about that. And co-author of the Forbes CFA Institute Investment Course. Welcome, Vahan. Nice to have you here with me.
Thank you very much, Steve. That was a great introduction.
So let's just dive right in. We are in the middle of this crazy world in so many different areas, but in the finance world, since 2022, the Fed has raised interest rates 11 times. Are they going to stop? What's the future here?
Well, I certainly hope so. In my opinion, they should have actually stopped about 100 basis points ago. But the Fed will keep interest rates high. I don't expect them to cut interest rates, but I think they are very close to the end of the increases. Of course, their major objective is to bring inflation down to 2%. At least that's their stated target. And I think we're getting close to that. There's a lot of evidence that inflation is coming down, especially core inflation, which excludes some of the more volatile things such as energy and food. So yes, I'm betting that the Fed is perhaps, maybe they got one more rate increase to go, but I think they're very close to being done.
Well, let's hope you're right, because it's been so volatile, and depending on what your publication or news outlet of choice is, you hear different things. So I'm going to rely on you as our expert for the day. So let's hope that you're right. There's a lot of talk about a soft landing, and I guess if you could tell our viewers what exactly that means, and do you think we're going to have a soft landing?
Yeah, well, that's a good question. So when the Fed increases interest rates to reduce inflation, one of the things that happens is that economic growth slows down. So a soft landing refers to a slowdown in economic growth that's not too severe, that would not result in, let's say, a severe recession. So the Fed is hoping to just slow growth down, or perhaps have a very mild recession that's not too long. That would be considered a soft landing, as opposed to a hard landing, which would be a very severe recession.
I want to throw one question, and I just read that we had a 5-month period where housing sales dropped for the first, or housing prices, dropped for the first time in a long time, and they're just starting to pick back up. I would presume that those drops in home sales were directly related to interest rates and the rise in the interest rates, right? But really, old people like me remember when 7% was actually a bargain. This 2.25 was like a rummage sale that we didn't see too often. So I look at 7% and I don't see it as being outlandish. But now I see that home sales are back on the uptick. Do you have any insight into whether those two are related or not?
Well, they're definitely related. Surprisingly, home prices have actually not fallen very much at all. They've remained pretty high, but it's the activity that's fallen. The number of sales have really fallen, simply because there isn't any inventory, because people who own homes don't really want to sell them if that means trading a 3% mortgage for a 7% mortgage. So the buyers don't have a lot to choose from. So as a result, they can't be choosy, and they have to pay the prices that the sellers are asking if they really want to buy.
Yeah, there's a lot of people that did quite well over the past 2 years. Going into COVID, nobody really knew what was going to happen, and it turned out to be a gold rush for homeowners, particularly in certain suburban areas. So thank you for answering
Absolutely.
that question. I want to change subjects totally. We all drive vehicles, and we all know the price of gas. The price of oil has recently surged. If you don't have a car, then you don't know that. But if you buy any sort of product, you see the impact that oil prices have on anything: milk, meat, poultry, vegetables, right? Because the price of oil impacts everything. Airline tickets, train tickets, everything has gone up. Do you think that we're at the peak of oil pricing? Do you think there's still more raises? Like, what's in OPEC's mind here? Where do you think we're headed?
Yeah, I think we're very close to a peak. Now, oil prices have risen above $100 per barrel a few times in the past, and it's certainly possible that we might get there, but I think we're close to the peak. The most recent surge was caused by Saudi Arabia cutting back production and then extending that cutback to the end of the year. So yes, there are some concerns that oil prices may go higher, but as for myself and my clients, I've actually been selling energy related stocks because they did so well in 2022 and became such an outsized position in my portfolio. I'm not, adding anything now, but if oil prices get back into the, 60s or 50s, I would consider buying again.
That's a great answer, and let's hope that you're right. And because I don't want to pay $4.50 for a gallon for gas anymore. So actually, that is a really good lead in to our question of the week. Our question of the week comes from Rachel Gallett in Philadelphia. Are EV, otherwise known as electronic vehicles, a good investment at this time? We don't want to know if they're good to drive or if they go far distances, but are they a good investment at this time?
Yeah, well, the stocks of EV companies might be a good investment, but I think you need to be very careful because first of all, there are companies that are pure EV companies, companies such as, Tesla or Rivian or Lucid. And then there are companies that are traditional automobile manufacturers that are getting into the EV business. And there's a huge difference in the valuations. One of my favorite valuation metrics is the price to sales ratio. And that's because sales is the top line of the income statement and the most difficult to manipulate. So when you look at some of these companies, they have price to sales ratios that are very high. But the traditional EV makers, the traditional automakers have very, very low price to sales ratios. So if you want to bet on EVs, it's, in my opinion, a good idea to buy stocks like, Ford or GM or even Mercedes and BMW, which are now going big into the EV business. But one pure play EV company that I like is NIO. That's the Chinese company. It does have a relatively low price to sales ratio. And in full disclosure, I own both NIO and Ford in my clients' portfolios.
Well, there you have it, straight from the expert's mouth to your ears. NIO and Ford, get on it right away before everybody else knows. As a Money Matters insider, you heard it here first. If you want to send in a question, here's how you do it.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Welcome back. So Vahan and I are happy to have a special guest join us right now. That is Ben Johnston. Ben is the COO of KAPITUS Partners. KAPITUS, the way I describe it, and Ben's going to get into it, business financing for businesses' everyday needs. And whether it be CapEx or equipment or everyday needs, KAPITUS is your go-to. So Ben, welcome, and thanks for being on the show.
Thank you very much for having me.
So let's get right into it. How would you describe the environment today for small businesses?
Sure. Well, I think it's a very challenging environment for small businesses today. Higher interest rates have really taken a bite out of the profitability of many of these companies. And consumer spending is beginning to pull back a bit in some areas. And consumer spending is really the lifeblood of small business revenue. And then compounding that, you see banks are tightening. And, after the issues with Silicon Valley Bank and the tightening around those banks, we're really seeing a contraction in capital that is creating a real opportunity for the non-bank lenders to step forward and help small businesses in tougher situations.
So Ben, let me ask you a question. You mentioned the higher interest rates. We know that higher interest rates haven't really had that much of a negative effect on larger companies, but they are affecting the smaller companies. Can you explain why smaller companies are much more susceptible to these rates?
Sure. With higher interest rates, we're really seeing margins starting to be compressed by small businesses. So many companies that borrow money in order to purchase inventory, such as retailers and manufacturers, they're spending more now in order to get that inventory in the door and then be able to turn around and sell it or manufacture it. And as companies grow, many are really seeking working capital in order to bring on new jobs, pay higher upfront costs, get that inventory in the door that they need in order to take on that next job and train those people. And so they're often looking for that money coming in, and they're paying more for it. And at the same time, a lot of their the people that they are selling to are extending their timeline for repayment. And so as those times, the time to get the money back in the door is stretched, the cost that they're paying for working capital is growing. And as a result, margins are compressing for many small businesses.
That's interesting, because it seems to me that particularly, you mentioned retail. As I look at the real estate space, the retail sector seems to be one that continues to grow. So it would suggest to me that, money is available, whether it be through traditional, non-traditional hard lenders. But are small businesses able to get, do they have access to the capital that they need, even if they have to pay a premium?
So there is capital out there. That's the good news. The bad news is that banks, as I said before, have really been pulling back. And to be honest, I don't really think banks have ever served the small business community very well. But banks have been very significantly pulling back ever since the pandemic. And now with the recent turmoil in the banking system, over the last few quarters, we've seen that pullback being even more exacerbated. So I think it's really important for small businesses to keep a number of relationships. Certainly your primary banking relationship is an important one. And to the extent capital is available there, small businesses are going to want to take advantage of that. But, having other banks that you're in contact with and non-bank lenders who spend all day working with small businesses to help them get that capital, I think that's really important to keep those multiple relationships open.
So, Ben, if, given the current economic climate, if I were interested in starting a small business now, what type of business do you think I should start?
I think in many ways it depends on your passion and your skill sets. But there are a number of businesses that are coming to us for additional growth capital and are showing signs of strength, even in the middle of a difficult period of time. And some of those, some of our biggest areas of opportunity that we see are actually in the building and construction industry. As I'm sure you know, America is experiencing a significant housing shortage out there, and housing starts continue to climb even in the face of rising interest rates. And between population growth and historically low unemployment, that housing demand is driving a lot of demand for builders and contractors. These higher interest rates, haven't really pulled back as much as we would have expected. And when we look at our portfolio and who is doing really well, we especially like the specialty trade contractors, the electricians, the plumbers, the HVAC professionals out there, the guys that do really well as housing stock grows, but also do really well just servicing everyone's everyday needs. So that's one area of opportunity that we see.
Interesting. There seems to be so many new businesses popping up, and that's a pretty interesting perspective. This morning, I was asked this question. I'm going to ask it to you so I do a lot of speaking like you both do. And today somebody said to me, I want to start my own business. I'm tired of working for somebody else. I'm an aspiring entrepreneur. Give me some advice. And I gave them the advice that I would give, but I'm curious from your perspective, what do you tell, because I'm sure you must meet aspiring entrepreneurs, people that want to stop doing what they do, whatever it is that they do, and start their own gig, whether it be a small business, a consulting practice, something. What advice do you give, particularly from a money perspective? Do they just quit one day and start the next day? Like what's the ramp up for an aspiring entrepreneur from where you sit?
Sure. Well, look, if someone has the passion and the idea to get out and do a business, I would never want to hold them back. But I would say if you're going to jump in with 2 feet, make sure that you're well capitalized and have the backing that you're going to need in order to go through some trials and errors and some potentially difficult times. What I might advise to those of us with families and financial responsibilities is to maybe think about how you might test your idea and start your business potentially as a side gig. There's a lot of time on nights and weekends when we can be using our creative energies to work out problems, test markets, build relationships that will help you figure out whether your product is ready for prime time or not, and maybe start making those sales, get some revenue in the door. And with that type of feedback loop established, you're going to find that you're going to have an easier time going out and raising money. You'll raise money at a better valuation. You'll probably be able to raise more money as a result of that. And with all of that wind behind you and a more proven product, now that may be the time that you want to launch out on your own and start that business that is capable of taking market share and really growing and supporting you, your family, and a stable of employees.
So Ben, I often hear that that healthcare is a really hot area, that it has potential for growth because of the aging population. I can certainly imagine how a large business could go into that area. But how would somebody who wants to start a small business, start off in the healthcare area?
Yeah, well, so healthcare is actually an area that is a very important vertical within our practice. And we have all kinds of different healthcare professionals. Certainly, if you want to be a doctor or a dentist or a veterinarian, you're going to go to school and you're going to come out with a degree and you're going to be able to start that business. But if you have a passion for healthcare, you have a passion for helping people, but you haven't gone to necessarily one of the professional schools in order to do that, there are a lot of opportunities out there. We have an aging population. We have Medicare expansion across the country, meaning that there are more insured Americans and more older Americans in need of care. And so we're seeing a lot of demand and interest from home health care facilities, senior care facilities, physical therapists, health and wellness centers, these types of businesses that are really providing the care. They may bring in the physicians, they may bring in the those with professional degrees that can provide the services. But we really need businesses that are there to support that community in many different ways as our population continues to age.
That's so spot on, because the group that I spoke to this morning was the Professional Care Alliance of the Delaware Valley, and it's all people within the senior care space, whether they're home healthcare providers, they're nursing home administrators, they're lawyers, they're financial advisors. That space has expanded as the population ages. That vertical continues to have needs, and I still find that there is a dearth of businesses that are viable, that are have the right capital, the right equity. So I guess my question would be, from KAPITUS, do people come to you? Do you go find customers? Like, how does your business work from a customer integration perspective? Where are you finding your leads?
Sure. Well, if you listen to Sirius Satellite Radio, you may hear an advertisement for KAPITUS from time to time. We are actively looking for great small businesses. Often we partner with other lending institutions and other businesses that serve small businesses, and they will often refer their customers to us because we provide a unique type of capital to help those businesses grow. And so often businesses will be looking for a certain service and say, hey, I'd really like to be able to finance this. And we'll get referrals in that way as well. So it's a combination of trying to reach out to the customer directly through advertising and marketing, and having great partnerships with great representatives of other brands who can help funnel qualified customers into us.
So Ben, let me just ask a quick question. I mean, I know when banks make loans, they take in deposits and then they use that money to make loans. So where does KAPITUS get its money from when you loan to businesses?
Sure. Well, we are private equity backed, and we have issued a number of public securitizations with CUSIPs in the market, and we have a revolving credit facility from a bank as well. And so we securitize a few times a year, and we'll grow that revolving facility up. And then when it gets to size, we'll go out and tap the public securitization markets.
I want to go back and talk about another industry quickly, because I realized I forgot one. So I think you guys do a lot of work some work in the hospitality space. And in the Philadelphia region, we have a pretty vibrant hospitality community from Philadelphia and all 5 counties. Very robust CVB, Convention and Visitors Bureaus. You have a lot of people coming in for not just history, but for a lot of different reasons. There still seems to be a shortage of hotels and businesses that service the hospitality community. Are you seeing that? Are you seeing a lot more people coming to you from that hospitality space? And how do you service that industry?
Sure. Well, we absolutely are seeing demand and growing demand across the hospitality industry. I do think that a number of hotels scaled way back or closed entirely during the pandemic, especially in sort of major metropolitan areas that saw a big drop in tourism. But that is absolutely coming back. Here in New York, we've seen a resurgence of the hotel industry. We've also seen a dedicated effort to sort of clamp down on Airbnb activity, which is helping bring back more use of the hotel industry as well. And the restaurants are full again. I think the only exception to that is in certain parts of inner cities that have very high office density. And I think there are still pockets of those cities where people are not working in the office nearly as much as they did. And I think that has hurt very targeted aspects of the hospitality business. But overall, people want to be out. They want to travel again. They want to be interacting with people and enjoying life. And therefore, especially in residential parts of cities, we're seeing a real boom in the restaurant industry, touring companies, even movie theaters this summer seem to be coming back with Barbie and Oppenheimer and such. So I think it's a positive story overall with a few caveats there.
So just one follow-up question to that. You mentioned the vacancies in some of the offices. Is it your expectation or hope, or does it not matter with KAPITUS that there is this continued shortage of in-office work? People are still working hybrid, remote. There's a disconnect between employer and employee. You see a lot of multifamily businesses trying to take over office buildings. You have office buildings that are, at least here in Philadelphia where I am, have declaring bankruptcy because there's nobody left in the building. Does that impact you at any point in the next 3 to 5 years?
I think overall, the vast majority of our small businesses really operate outside of the office building, the traditional white collar office building, space. We have the contractors, the manufacturers, the hospitality businesses. And so I don't think it will have a huge impact on our core data set. I do think that overall, it probably makes us as a society that much more efficient. And I think that we'll see real dividends going back into the business community overall in reduced commuting time, more time with your family, more time to work on that other business model that you have in the back of your mind. I think there are some really positive potential impacts. And even with us at KAPITUS, I'm here in the office today, but there are fewer people here than there would have been 3 or 4 years ago. And we have a much more distributed workforce than we did in the past. And it's really worked well for us, and it's helped us attract some great talent who benefit from all of the things I just mentioned. So net, I see it as a positive. I think there's some hurdles that need to be overcome from a management standpoint. But I think it ultimately, when we see economic data being recorded, I think people will say that it was a positive overall.
Well, that's great, Ben. Thank you. KAPITUS Partners. If you need money, financing for your small business, find Ben, go to KAPITUS Partners. I'm already impressed. If I need money, I know where I'm going to go. Ben Johnston, thank you for being here. Vahan, thank you for co-hosting this show.
Thank you.
Really great show. Our next guest is Michael Poisel, CEO of Philo Pharma. Don't know what Philo Pharma is, but if you stay tuned and you watch Money Matters on the next show, we're going to find out. Have a great day, everybody. Ben and Vahan, thank you so much.
Thank you.